All right, my children, it's time to record and tell the people that they can become their own banker.
Yeah.
Hi, my name is Jesse Durham, and I teach people to live and leave a lasting legacy. For today's episode, we are going to address some commonly asked questions about infinite banking, whole life insurance, becoming your own banker. The first question that I have is about fees. Jesse, what are the fees for the policy? Well, one of the beautiful reasons why we use a whole life insurance policy is because no matter what your age is, when you own this type of a policy, the premium is what the premium is. Now, you as the owner, you actually have some levers that you can pull. Pay more premium typically when you want to, pay less premium when you need to, but the premium includes the cost of that type of a contract, period. So it covers everything, meaning it covers the expense for the insurance company. It covers whatever fees there may be. So another great reason to get policies on young ones, because you can pay with depreciating dollars now, premiums into these types of policies that are going to create multiples of themselves in the future. It's an appreciating asset. So the fees with whole life insurance, nothing extra. The premium is what the premium is. Now, if you have riders on a policy, there may be additional costs above and beyond what your base premium may be or what you can pay into the paid up additions rider or a term rider. For any of those terms, make sure to check out my encyclomedia series to learn more about each of those. I'm not trying to do too deep of a dive right here, but there may be additional costs, not fees, but costs for those riders. But in general, no fees. You pick your premium, and then that premium is what it is. All right, let me go to one of y'all, see if anybody knows this answer for this next question. To get a policy, do you have to have a medical exam?
Yes.
All right, and what is a medical exam? Can you tell me some things that you might have to do during that medical exam?
Draw blood.
Yeah, they're going to draw blood. Do you know anything else?
Question.
They'll ask you questions, right? How's your back? How's your big toe? Okay, you were going to say that one. What's something else that you would typically do when you go to the doctor and they're checking you at the beginning?
Pee in a bottle.
Pee in a cup, right? So the blood, the urine. Do you stand on anything?
No. Yes. Yes, they check your weight.
Yeah, check your weight. Right. So all those normal, typical things. So most times the answer is yes, there's going to be a medical exam. Now, again, and here's a great reason why I wanted to do this Q&A series installation today with our children, and it's because that typically for minors, you actually don't necessarily have to have a medical exam when they are getting policies on them. So that's cool. And there are those exceptions out there, those stellar specimens that might not have to have a medical exam. But in general, the answer is yes. So you should anticipate doing that. Now, on that point, I will tell you that I just spoke yesterday with someone who was inspired to become healthier. When they first applied for a whole life insurance policy, they were denied. But after addressing their pre-diabetic condition and their weight condition, they were able to get approved for a policy some months later. And what a great thing that they were inspired to improve their health while getting on this journey of infinite banking. All right, let's see. Let me ask y'all another of these questions and see if y'all can answer this question. The next question I got from someone recently was, what if I want to quit? Can I quit? No. And what happens if... Oh, all right. Now, why would you say that? Let's go ahead and answer it. You said, no, you can't quit. Why can't you quit?
Because you have to do it.
Right. I understand what you're saying now. That's good. So when you're trying to do something, Daddy's told you, you keep going till you get it, right? Right? Mm-hmm. That's my girl. What did you do recently for the first time?
Driving my bike.
Yes. You learned how to ride your bike and you kept going until you got it, right? I'm so proud of you. Boys, when we're talking about policies, same question. Can you quit?
Yes.
Right. You could just say, nope, I don't want it anymore, because it's a piece of property that you own. Okay. Now, do y'all know what happens if you quit?
You don't earn money that way.
Yeah. The policy won't grow. You're not going to have a death benefit that you could leave behind for your wife or children or whatever. Right. But here's another thing. Whatever the cash value is that you have built up in the policy, you actually get to keep that. The insurance company will send that to you. So if you want to quit, the money that you've paid so far into that policy, whatever that cash value is, whatever that surrender value is, they'll actually send you a check for that. And you can quit. And you don't have to do it anymore. And you get money. Awesome. All right. So let's go to the next question. The next question is, how soon can I get to money? So if somebody's getting a policy and they're paying, what'd you say?
ASP.
ASAP, as soon as possible. Right. ASAP, as soon as possible. So I will say right away when I'm talking to people, the technical answer, and it's a conservative one, is to say 30 days. So 30 days from the time that you pay a premium, it immediately creates a cash value, and you can leverage that cash value within 30 days by taking a policy loan. Now, practically speaking, it could just be several to a few business days. I mean, once the premium's clear from your bank and it makes it to the insurance company, and the insurance company can see that, you can typically give them a few or several business days, and every company might be a little bit different, but they'll send you a policy loan as soon as that has processed through. So conservatively, we'll say 30 days. All right. Now, again, for this question, which is, how much death benefit does my premium buy? That's a traditional insurance question, but I don't mind addressing it. And again, it's great that I have several different ages represented here. So, Lana, how old are you?
5.
Josiah, how old are you, my son?
9.
9. Okay, can you say that in the microphone?
9.
Right. And Jacob, how old are you, son?
11.
11. Okay. And I'll be turning 40 this year. So we've got several different ages represented here. So the answer there is that, yes, a younger or healthier or non-tobacco. So there are different classifications that we could use to say that someone who's younger or healthier and doesn't smoke. You don't smoke, do you? You don't smoke, do you?
No.
Good girl. You're going to get more death benefit if you're younger, healthier, non-tobacco, etc., than someone who is older or heavier or does smoke, etc., for the same premium dollars. That's just the way life insurance works. And addressing your need of protection, your need of coverage, is a vital part of my process. I do believe that first and foremost, everyone should have a guaranteed adequate protection legacy immediately created. Now, we do accentuate hold that book up, my son. We do accentuate the structure of our policies, our whole life policies for infinite banking purposes, to have a significant cash value. That's what Nelson says in the book, is to de-emphasize, thank you, son, the death benefit so that you can build for a significant cash value for the purpose of banking, but that's not to disregard completely your need of protection. All right. So a younger, healthier, non-smoking person is going to get more death benefit. The answer is I don't know. Now, I can run an illustration when I'm in my onboarding process with a prospective client to get in the realm, but until an insurance company gives you a rating, we're not going to know exactly what rating you're at and how much death benefit that would exactly qualify you for if you're just picking a premium amount to generate cash value. But I would likewise say from the get-go, if you have a certain amount of death benefit and coverage that you want to have, that you feel you need to have, then we'll address that and we can accommodate both at the same time. With a properly structured whole life policy from a mutual company that pays dividends, you can have both. You can have adequate protection, adequate coverage and death benefit while still creating a robust infinite banking style policy. All right, let's see. I've got one more question here. This was me speaking with a prospective client recently, y'all. So there are different kinds of policies. Do y'all know what's another word I could use for policy? Do y'all know?
Bank.
Yes. We talk about it in that regard. Do you know another word?
I was going to say bank.
Okay, it's a good word. Have you heard me use another word?
Policy?
Yeah. Another word for a policy is a
Deal.
or contract. A contract. Okay. A deal, a contract. It's you saying, well, hey, insurance company, if I give you some money, will you give me a death benefit? Will you grow that money for me? Will you let me earn a dividend if you go out and do good things with that money? And then they're going to check you out and say whether or not it's a deal. And then you've got a policy. You've got a contract. Now, not every deal is the same. Not every contract is the same. Kids, I use, like Nelson talks about in the book, whole life insurance because it has guarantees for one thing. Guarantees. That's a certain kind of a deal. That's a certain kind of a policy, a contract. A guarantee means it's going to happen. All right. Not maybe, not might, but it's going to happen. But some people nowadays, they're trying to buy policies because they're told to buy policies that aren't that kind. And they've got different names. Some of them are called variable. Some of them are called index universal. There are different kinds. Index universal life insurance is a kind of a policy that I was recently discussing with someone. They had it. They'd bought it a year or two ago, and they requested to look through that contract with me. And I just read it to them. And then I asked them questions. And I said, did you know it was going to do this? And they said, no, I didn't know it was going to do that. And then we looked a little bit further in that contract. And I said, did you know it was going to go all the way down to zero if you look at the guarantees in that kind of a policy? And they said, no, I didn't know that. So I don't know if somebody didn't show them. I don't know if they showed them and they weren't paying attention. They were making them look at some other part and not showing them where it was going to go down to zero. So see, when Daddy gets older, one of the reasons why I want to use whole life insurance is because I want to have guarantees that my money that I pay now is going to be even bigger then. Because we're going to want to do more stuff in the future, right? Yes, sir. I mean, us together, like no matter whether it's business, no matter whether it's more land or real estate, or no matter whether it's more trips or whatever. You've been talking about buying stuff, things y'all want to do. So we're going to want to do more. I want to guarantee my money. And that's what I was telling this person, was that if guarantees are important to you, then you want a policy that has strong guarantees. And that means whole life insurance. So that was just another individual that I sat down with recently who didn't know or didn't look or wasn't shown that the guaranteed values of that index universal life insurance policy were going to lapse right at passive income, retirement age, time of life. That policy was going to lapse, which would mean that right at $300,000 that they would have paid in premiums over that time would have evaporated, because that type of a policy would have been eating itself. It would have been going down later in life instead of continuing to rise, continuing to increase like a properly designed and utilized whole life insurance policy would do. So those are some things that stick out to me regarding that question of, is IUL for infinite banking? What are the pros? What are the cons? What are the differences? I would encourage you to check out, I've got an installation just on IULs. It's in our Myths, Mysteries, and Misconceptions playlist. Go there for the deep dive, please. Nelson, let me summarize by saying Nelson didn't have IULs, didn't write IULs, or universal in general. I also personally own whole life insurance. Term has its applications as well, but not universal. For me, that's where I'm at. Don't personally own any, haven't written any. So we hope that this has been helpful in your education process or implementation of infinite banking. If you have more questions about whole life insurance, infinite banking, you can put those in the comment section below and I can address them on a future Q&A episode. Otherwise, you can find us. Jacob, where can the folks find us?
DurhamTalents.com.
Absolutely. And what do we tell everybody, guys? We hope that you live
and leave a lasting legacy.
Absolutely. Y'all have a great day. Take care. Oh. I need you to stop that. For today's video, we're going to be For today's episode, all right, you done making those noises? Are you good? We're recording, Lauren.
We're recording.
What's up, J-Do? Come in and say hey to us real quick. I mean, if you can, we're just sitting down to record another episode, and I got all the youngins.
Everybody, okay.
I got all
Don't
the
screw
youngins.
this one up.
Okay.
All right, the last one, I could tell. It was rough. Get it right this time. You, ma'am, you did great. Please. Everybody been good so far today? All right. Get worse.
We got the phone quiet.
You got the phone quiet.
We hit record.
You hit record. Why are you doing that?
Yeah, why are you doing that?
Yeah, why are you doing that?
All right, my children. It's time to record and tell the people that they can become their own banker.
Yeah.
Are we going to speak?
I was giving you an opportunity to do it. Aye.
Alright. Let's do it.
All right then. No, we didn't have to do it the whole time. We're just doing it now, and it'll be a funny part later after we get to answer some questions.
Aye.
I
Alright.
I love you, lassie.
love you.
Da.
Da.
Aye, that's right. All right, let's see. Can you see how your faces look good on the camera?
Mm-hmm.
Let's try and keep it that way. Sit there well, all right? So that you can build for a